No, I mean, I think that there's a transition here that's happening. And it's been a really challenging week, and I hope we get to talk about the other stock that's in my portfolio that had a much better week. But I think from a Facebook perspective, Steve makes a really good point, and I know I never say that, but he really did. Nobody likes this company. You don't want to own the stock. And so when something like this happens, our expectation is that we could see another 10 or 15% down from here, just from a sentiment and overhang perspective. So if you're looking at this from a fundamental perspective, stocks selling right now somewhere around 15 or 16 times 23's earnings. That's pretty cheap for Facebook. We saw a similar disconnect or dislocation in the stock price when they went to mobile in 2012, as well as to stories in 2018. So this isn't something that we don't have precedence for. But again, both of those periods, you also saw this sentiment overhang bring the company down. I think the Snap story is actually relevant here because I think you make a great point, Scott. They've navigated this particular change a little bit better. Snap is also very specific in that they curate their content for a very specific type of market. And so they're not going to have the overall user growth that you could get from Facebook in its myriad of apps. But I think that they have done a better job of saying, hey, you know what? How we get around this is we actually put out content that we know that our users really enjoy and our target users are going to enjoy as well. So I do think that it's going to be a tough road for the next couple of quarters with this stock, which is why we didn't add to it on the decline. But I'm not putting it out of the realm of possibility that we could add to it later this year as we get these additional sentiment sellers.
Okay. Pete Najarian, are you a sentiment seller of the position that you have, or are you standing pat?
I am not. For right now, I'm standing pat, and I'll give you a couple of reasons why. Tom Lee already discussed the fact that he thinks it's going to be up by the end of the year. I think he said something like 13%, 15%, something like that, from this point where we are right now. I think on top of that, Mark Mahaney was talking about the macro trends that are out there are temporary. When I look at this company, what bothers me most right now is they've got to get their focus back, Scott. They're putting all this money, as Steve Weiss just defined for you, with Meta. And I'm okay with them wanting new things, but they have not done a great job in doing that over their past history. They've made 91 acquisitions since becoming a publicly traded company. So because of that, it tells me who they are. They can do a great job analyzing companies and making that through acquisition. I'm not so sure they're great at building it past Facebook itself. So when you look at Instagram and you look at everything else that's the real parts of Facebook that bring in the money, the ad revenue, they're losing right now. They've got to refocus, and I think they will.